Hi, ladies and gentlemen. Welcome. It is my privilege to introduce a luminary in the world of venture capital and entrepreneurship in India, Mr. Mohit Gulati. As the managing general partner at ITI Growth Opportunities Fund for over half a decade, Mohit has been the driving force behind the fund's vision, guiding ambitious founders in solving real-world problems. With a portfolio of over 24 companies, he has consistently contributed to the Indian VC landscape while collectively creating over $1.2 billion worth of company value with his team. Mohit's diverse experience spans advising and supporting early and growth stage technology ventures across various sectors, showcasing his ability to transform unique ideas into high-impact businesses. His expertise, paired with his relentless drive and extensive certifications, solidify his position as an invaluable asset in the realm of venture capital. And he does not stop there. Mohit shares his knowledge as a visiting faculty member at a management school where he imparts wisdom on venture capital and rapid growth business development. Mohit, we are privileged to have you here, and we're excited to learn about your insights and experiences. Welcome to Purrseverance.
Thank you so much, Devika, for the illustrious introduction. I think you've more than well done justice to it.
Awesome. So Mohit, without further ado, generally we like to ask our guests, how are you really doing today?
I am it's an interesting question to start off with. I'm doing well personally, physically, but I think there's a burning desire inside me, which is still not doing well, and that desire is to do a whole cleanup act, right? In just the way that capital is working in India. And I've been doing it across some of my LinkedIn posts where I'm talking about ethics, I'm talking about integrity. I think my industry needs a full-blown cleanup act. And that's the part which is irking me, which I'm not doing well about. And I think I need to do more in just getting everyone together and sort of doing things the right way in order to make this a larger sustainable practice. So I hope that answers your question.
Absolutely does. And thank you so much for the honest discourse. I know I described you with a bunch of facts that are there all over the internet. But could you help me understand your story, Mohit's story, from your perspective in a quick snapshot?
So I think, my journey is essentially described in one single word. It's called serendipity. I think the world sort of has come in its own way to make things happen across my journey. I think I met some of the youngest, some of the brightest minds out there, who have each one of them has taught me so much. And really, the culmination of what we are building today is a sum of total parts of a lot of serendipitous things that have happened, right from where I started my career, seeing a bus cycle very early on. So being a little more conservative about, how to manage capital, having the right set of ethics in place, integrity in place, to sort of, because I think, there are 100 ways of making money, right? The question is, can you not think about making money, and can you think about creating great businesses or creating impact, and just money flows in as a byproduct? I think that is really the journey about where I've really never thought about, X net worth or X sort of factor multiplication on the money. It's just been about, being invested in great things. I like to call myself as a kid in class who basically, people would ask, right, what will you grow up to be? And everyone would have answers like, I'll be a teacher, and I'll be an engineer, and I'll be a pilot, and blah, blah, blah. I like to be the last kid in the class and say that, okay, I want to be all of these guys. And essentially, venture capital allows me to sort of be all of them, right? Through every entrepreneur that we invest in, essentially, we are in some form 1/10, 1/100th of that particular entrepreneur journey. So that's really the best part about of being in this space, I think.
That's awesome. Yeah, I think that's one thing I personally relate to, is like the thing that, and I'm fairly new to the industry, I would say, compared to you. But the thing that drove me towards the industry was the same thing, was the avenue to just use so many skill sets in the same place while still learning new ones. I think that's very exciting. But just to sideline a little bit, you spoke about how do you not think about money as a driving force, especially in such a competitive market like India? How do you go about reassessing your mental models?
Again, like I said, right? I mean, I think It's unfortunate that the world that we live in today basically quantifies success in a metrics of how much money did you make or what's the ROI. I think success stands for a lot more than just ROI. Uh, does money buy you the basic necessities of life? It absolutely does. And who doesn't like to have enough of money, right? Everyone has dreams and desires, but the problem is that the more you make it, the more you realize that it's an infinite rat race, right? There is no number one. There will always be someone above you. Even if you're Mr. Ambani, you'll always have a Mr. Adani who will come and compete and beat you on that number one prize market cap. So there is no end to it, right? It's about where you draw the line and say, okay, this much is fine, and anything above this is not really adding any marginal. It's basically marginal utility to life, right? Yes, maybe it might help me in my retirement, but who wants to retire when you can sort of just keep your shoes on till the last moment that you're alive? So I think, my style of looking at money is very different. I like to sort of, even when I'm investing in the listed market, in the listed markets, right? I essentially like to think that I'm buying into great companies, right? So one of my largest investments is Tata Motors, Titan Capital, Titan Industries. Essentially, I feel like a 1/100th owner of those companies, right? That I'm betting on India's best EV manufacturer. I'm betting on India's best gold reseller. So that is, and when you do that, when smart people are running those businesses, they will of course do well for their own stock price, and you will, as a byproduct, make money. So so that is how I would look at it. It is an important fact, and I think it's the first million which is always difficult to make. After that, it's the power of compounding. You really have to be super stupid to destroy money from there.
Right. Okay. I think that's a perfect segue into people who run companies and smart people who run companies, right? And I think you've spoken about quality entrepreneurs as well in one of your posts. So I really want to understand, as somebody who is, let's say, thinking about starting a company, I think one of the most ignored point of view or perspective is the quality of the person or the character of the person who's actually building the company itself. So how do you define a quality entrepreneur?
That's a tricky one, right? Because essentially, as investors, you only get, say, at best 45 minutes to an hour with an entrepreneur, right? You're trying to gauge so many things in that 1 hour. You're trying to find market sense around the business that they're in. Trying to see, is the TAM large enough? Can this business be scaled? And then speaking about the quality of the entrepreneur, I think I like to sort of put it this way: you plant in subtle questions into your conversation, and the answer to those planted questions gives you the quality of the entrepreneur, right? Like one question which I definitely like to plant in is something about the upbringing of the entrepreneur, right? Because I'm of a firm belief that no CFA degree, and with all due respect to all CFA charter holders and all your listeners, I'm of the fundamental belief that ethics can't be taught in theory, right? You can acquire ethics. You start actually acquiring ethics from the first day that you were born. It's your parents who impart you the first knowledge of ethics. Did you have a father who basically, when you were walking with, saw a fallen 10 rupee or 100 rupee note and asked you to pocket it, or did you try to find the rightful owner of that note? That will be the defining point of ethics for you. Because if you're cutting corners, if you're going to be the one trying to pick up and pocket those notes, then essentially you may be building the greatest business, but you will falter because your ethics are just not in the right place. And history has shown it, right? I mean, all the entrepreneurs that you've seen who have faltered, you will actually go back and see that that essential dose of ethics from the parents itself was missing. And that's where things really went wrong. I don't blame the parents. I think parenting is difficult in its own way, but it's important that we bet on entrepreneurs who have their heads and minds in the right place. I love entrepreneurs particularly who do not think about market cap, right? Who don't say that in my Series A I will raise this money at this valuation, B, C, and all that. They basically talk about what is more important, that I will build this kind of revenue. I will touch so many lives. I will do so many orders per day, per month. Those are the entrepreneurs who basically are laser sharp about their business. and creation of market cap, creation of their valuation is a byproduct. Uh, and if you can gauge that in that 1 hour meeting, that really is the key success mantra.
Okay, that's interesting. Yeah, I've definitely met one or two founders where ethics was a questionable factor, and I think that really ruins your entire experience with a company, even if the let's say the tech company is good or the product is great, right? So that brings us to a little bit of focus on what ITI is doing right now, right? So can you give me a little bit of a brief on your investment thesis? What do you look for? Do you guys have a specialty?
So, I mean, before speaking about ITI particularly, I'll give you a little bit of a backstory about my venture capital journey. I essentially started off way back in 2012 as an angel investor. I mean, I didn't even start off as an angel investor, right? We started this podcast talking about serendipity. Here's your first take on serendipity.
Yeah.
Essentially, I was so bored of my job, which was as a equity broking guy. I was in institutional equity sales and research. So I was basically 24 or something, and I was like, okay, just very bored. This was 2012, so India as a country wasn't really going anywhere. There was a lot of political uncertainty. There was scam after scam. We were in a pretty dark space, if you remember. I think you were a lot younger than I was at that time, so probably lesser memories for you. But anyone who's gone through that 2012 era would realize that quote unquote shit had hit the roof. Right, we were in a really bad space.
Yeah.
And I think all of us as young professionals were trying to figure out what next. Should I do a B school degree? Should I switch careers? Should I switch paths? That sort of thing. And that's when I was basically at a beach in Goa, sitting out, figuring out where to take life. And my ex-boss calls me and he says, "What are you doing?" So I said, "I'm at the beach drinking beer right now." He's saying, "Can you take a flight to Bombay tomorrow morning?" And I said, what is the pressing need? Can I not just enjoy my vacation, which is on for the last 1.5 months? He said, just come. I need to speak to you. So next morning, I took the early morning flight because at that time, quote unquote, I was unemployed, right? So the early morning flights are the cheapest ones to get into.
Yeah.
So took one of those, came in, and I said, what is it that is so pressing that you made me leave my perfect vacation and come and sit here? He said, I'm starting a new firm. We can get into investment banking. I have a lot of relationships in the industry. Let me know when can you start. And I said, okay, I can start tomorrow. I mean, now that I'm here, I'm not going back. And that's how we started. And within the 7th day of setting up operations, we stumbled upon Ecom Express, which essentially was a banking mandate, turned out into my first venture capital bet, which was essentially all the money that I had in my account, and so on and so forth. So it's important that this journey sort of goes that way, because essentially what happened is after the Ecom Express check that we put in, I had nothing else to do in life, right? So I was like, listen, all of us cumulative have put close to $1 million in this. Why don't you take a more operational role inside and go and help them set up operations? They need help from us. I said, okay, fine. So took an operator role there. So Sanjeev and I would go to new cities, set up operations. We launched like 16 cities in, I think, 78, 80 odd days. So great on-ground learnings of identifying clusters, identifying delivery riders, and sort of building up. And then took this sort of playbook, bettered it, did Grab, did Vixo, did Healthify, 1MG, and a bunch of others. Made mistakes also in a bunch of them. And then around 2018 is when I decided, okay, can I sort of bundle this learning of investing in businesses and living a more operator life? Can I bundle this into a fund structure? So that's when I shook hands with the ITI group. And essentially, we started the ITI Growth Opportunities. The ITI Group is a much larger financial services firm. So the venture capital fund under me, I've always had the fundamental belief that by nature of how VC is, and particularly by nature of how India is, uh, I like to play a sector agnostic strategy, which gives me the ability to be invested across sectors and to be able to gauge into the future and invest in things which make sense to us. So as of today, we run a 7, 8 member team, very thesis oriented. We build out great sector reports, go deep into what we like, try and find the best entrepreneurs in those sectors, and we sort of go deeper into that. So first fund, we've done 20, 22, 23 investments. Most of them, I think 94 of them are alive after 5 years, are doing well. Yes, there's a 6% mortality. In the future, even that won't happen. Uh, Essentially, that's my style, right? That don't look at it as a transaction business. Look at it as a business which you can build great entrepreneurial ventures. Not everything has to be a unicorn. Sometimes, even if you do 15 investments and all of them grow at say between 20 to 25% year on year, your cumulative returns are pretty decent. What hurts you most is mortalities. What people keep talking about venture capital as a zero sum game, or more like a roulette table where, hey, listen, you're just placing your chips. The odds are against you. 99% of the companies will fail. I mean, if you're smart enough, if you have a great network, you shouldn't allow 99% to fail. You should allow only 1% to fail, and 99% should at least be alive and surpass their expectations. So that's where we are at. It's been a great journey. We fully deployed on our first fund. We are just getting approval for our second fund, so we'll start deploying from that sometime mid of next month.
Okay, awesome. So I caught you at the right time because I'm assuming things are going to get heated up pretty soon. But would you call all of this a much more instinctual approach to investing? Is that a word you would use?
When I was angel investing, it was all instinct. It was all gut feeling. In the fund setup, instinct, yes, does play an important role. But there are a bunch of checks and balances, right? So your instinct alone can't be the driving factor for a check.
Yeah.
Because you have the fiduciary responsibility of managing money for others. So there are checks and mechanisms, checks and balances around it. There are IC approvals required. So your instinct can definitely change your bias, both positive as well as negative, and it can help you propel you for a more compelling argument to be invested. But finally, you have to adhere to what the law of the land is.
Okay. Okay, sounds good. Now, the other thing that I keep hearing, right, in the VC space, the entrepreneurship space, is how do you understand the market viability of a product, especially in the early stage game, right? When you have your MVP and you're basically testing your product market fit. And you reach out to an investor and you say, and some entrepreneurs are great at talking the talk, right? Our product is great. We believe we're going to change the world. We're going to revolutionize a particular industry. So as an investor, how do you filter it down to just pure data and say, you know what, this product has scope?
So, I keep telling my team this, and also my students at my base school, right? That venture capital is a lot about just sitting back and dreaming, right? Do you have the ability to dream into the future? You can build out Excel sheets, and you can do DCF valuations. You can apply various mechanisms for valuation or projection around how the TAM will appear like. But essentially, it's about, yes, that gut instinct of, yes, this is a problem which is worth going after. And is it India centric, right? Because like we very recently we spoke to somebody who does plant-based products, and particularly plant-based milk. Now, as of today, I mean, it was very difficult for my team to sort of identify what is the TAM really for this space, right? Because you're looking at people who are vegans and are willing to spend upwards of 300 to 500 rupees per liter of milk, because it's a substitute to to the regular lactose milk. And then we realize that even if we take a very long-term horizon, the market size is essentially very, very niche at the top, right? There's only 0.5% of India which will actually be able to afford it, even if they want to, right? So I may want to be sort of moving to an alternative, but if I have to consume milk at 500 rupees a day, it invokes that question, right? So the dreamer in us couldn't see a very large TAM. We saw that it's a great dhanda. There is great potential for you to make ROI as a business owner. But is it going to be like a 1,000 crore market? Maybe not. So yeah, again, all of us get it right and get it wrong all the time, right? There's no set mechanism. Who would have known Mama Earth would come and disrupt Johnson and Johnson, right? But it did, and it beat them black and blue. Today, nobody even talks about Johnson and Johnson. And I can give you like 10 other examples like that. So you just have to be dreaming. That's
I like that. Sit back and dream. So take, for example, Mama Earth, right? As an investor, what if I'm sure you've had your misses about a company that you probably didn't see value in or you were confused about, and the company went on and did great. Let's say that's happened, or hypothetically, if that happens, as an investor, how do you approach that? Does that make you feel like a personal error or a hiccup, or do you address it in a very sportsmanship way?
No, I think, I mean, it'd be foolish on my part or anybody who says that, I have a 99 or 100% track record of only delivering hits and no misses.
Yeah.
We all have fair shares of misses. And I think, what I've come to realize, right, is at that moment, you have a particular reason behind why you missed that transaction, right?
Yeah.
And if that reason is strong enough, and you think that, you still will sort of side by that reason, despite you seeing that business going up to, say, unicorn status, right? Then that's just how it is, right? Like for me, one of the transactions which I felt that I had missed out very early on was Ola.
Mm.
Uh, Having met Bhavesh, having looked at it in detail, and I said, okay, should be invested in this. And again, host of things happened. There was a lot of valuation mismatch that happened. So the deal came to me at 300 crores. Within 2 weeks, it turned into 900 crore transaction. I couldn't accept the fact that valuations had gone up 3 times in 2 weeks. Nothing in materiality changed for the business. But because two VC funds were fighting for it, the secondary seller decided to up his ask. I mean, at that moment, it just felt I don't want to do it. But from 900, that company went on to like, I think, 1.5 billion or two in the peak, right? Was it a miss? It of course was. And there are so many other examples, right? Ola is just one of them. But I still continue to believe that my reason for missing it was justified. I wouldn't want to chase a transaction just because it's very hot. I wouldn't want to, pay 3 times more in 2 weeks' time just because external factors have asked me to do so. Had something materialistically changed, right? Like had something, drastically gotten innovated on the tech side, making the reason why the valuation should be higher, then it's a different case. But I would still, agree on my thesis that it was worth missing this one. So no regrets. Never any regrets around missing any of these transactions.
Okay.
I always wish very well for everyone.
That's awesome. Yeah, I think that philosophy can sort of be applied to a lot of aspects of life in general. And I can see that, you have a lot more wisdom than just the VC. So hopefully be able to tackle that sometime in the future. But moving alongside a little more technical questions, we do something called as a myth busting for a lot of new people in this space, right? And so there is a whole conversation about 120 hours and 80-hour weeks in a fun life, right? So what would you say about that now that you run your own game for yourself as well as for the people you mentor?
So I start my day super early. I'm actually on my desk at about 8:30 in the morning. But I definitely am out of it by 5:45. Because that's where I draw the line. I say, okay, work-life balance. I need to go home. I need to spend time with my child. I want to go to the gym. All of that, right? I mean, and then weekends. If there is a transaction happening, if there are meetings which need me to be sort of there, then happy to sort of spend that time. But like I said, right? I mean, because I'm not in the business of making, or I'm not in the business of running behind money. For me, that work-life balance is more important. And like I said, if you're so I always tell people this, right? Always hire people who are smarter than you are. When you hire very smart people, then you don't need to really work very hard. They work harder than you. You just need to make sure that whenever you walk into a room with them, that you still read up enough so that you can at least pretend to be smarter than them.
Yeah.
So I hope my team's not listening to this, but I actually don't spend that much. I don't spend those 80 hours a week. There will be some weeks where I'm probably spending 80 hours or maybe even more. But a normal day is 8, 9 hours, 5 days. That's 40 hours, 45 hours, 50 hours at best.
Okay. And is that true for your team as well, or team might extend beyond that sometimes?
More or less. So I give them a work from home on Friday, which essentially makes it a longish weekend for them. So if they don't have any work on Friday, they essentially enjoy a 3-day full sort of mini vacational week, right? But if they have work, then that Friday and Saturday can be strenuous. But at least they can sit in the comfort of their homes and sort of give out that work output. And essentially, that's what matters, right? I mean, I think COVID started to everyone that I mean, we are not like sweatshops like Infosys and TCS, right, who need their people in front of them
Yeah.
unless they are moonlighting elsewhere. I mean,
Yeah.
venture capital is such a business, you cannot go on moonlight too much. Uh,
Mm.
we're like 100 funds out there. All of us know each other. Where will you moonlight?
Yeah, that's true. That's true. Okay, that's good to hear. So, I'm pretty sure you've heard about this whole idea of red flags everywhere, red flags in a relationship, red flags in a friendship. So I want to extend that to when entrepreneurs come to you, right? What are certain red flags that somebody who's looking to invest in a person or in a company or a product should look out for?
I think the first red flag, and going back to our last conversation, I think from 2 or 3 questions prior, right? The first red flag is definitely founders who are talking about valuation from the first go, right? Absolute red flag. Saying that you come in right now and I'm going to raise the next round in which you make a 2x or 3x or 5x. I mean, you don't need to worry about what I will make, right? I don't need you to worry about that. I need you to worry about creating a great business. The byproduct of that is me making returns on it. So definite 100% red flag. I think, you know, for me, if I have to tell you the whole spectrum on which, or my founder relationship spectrum, right? I started my journey from the side that side of the spectrum where I said I trust everyone, right? Is great until proven otherwise.
Mm.
Okay, now I'm at a space in that spectrum where I say I don't trust you unless proven otherwise.
Right.
Right. So you need to earn my trust. You are a red flag to me the moment you walk inside. And the things that you will say from there on turn every red flag down. And that turns into green flag. Right. So if you come and say, I want to create impact, I want to build a great business, the first red flag is gone down. Uh, I like that approach more versus trying to find more red flags. Just keep a whole minefield of all red flags and let's see how much can he dodge it out. And the smart ones dodge it. The smart ones really dodge it well. The ones who have their hearts and mind in the right place, they dodge it. They just walk across that minefield so easily. They literally make a mockery of your minefield because they are just so good. They're just so good.
Okay, that's good to hear. There should be one simulation done. Hopefully you guys should release a video from ITI as to like how to be a good entrepreneur. Maybe that will be an inspiration to a lot of entrepreneurs out there. But let's say I am a startup founder, right? And I come to you and I say, Mohit, look, I need you to invest in my company, have a great product. But when you research my background and you see that I'm for the lack of a better word, a failed entrepreneur in the past. I've run maybe 1 or 2 companies that didn't work out. Does that have an impact on me getting investment from you?
No, absolutely not. I mean, failure in entrepreneurship is understandable. What will matter is in the course of the conversation, and we'll grill you a lot about your failure, right? We'll try to determine the cause of that failure. If the cause is say market conditions, if it is say product market fit not being arrived at, or 100 other things, right? We'll try to determine what is your relationship with your then co-founders or your investors from back then. Did you just sort of cut all ties and move on in life, or do you still sort of have that guilt in me that hey, listen, I had 15 people who were employed with me, my co-founder and I, we had to shut shop. I feel very bad. I feel sympathetic towards those 15 families, or that my investors lost money. Those are skill sets, or those are things which really will matter, right? If there is that compassion and sympathy in you, then all the failures from the past don't matter, because then your hunger to actually succeed is a lot more higher than most other entrepreneurs. But if you're not compassionate about it, if you're not sympathetic, if you're completely unapologetic about your past, uh, more so with regards to failure, and there's no humility that it's taught you, then there's a problem. Then you're essentially then at least in our words, you will be amongst the founders who is essentially making entrepreneurship a line of business, right? Where you just keep jumping from one course to the other.
Yeah. Yeah. And what is your perspective on cash injections, right? So, ITI or Mohit comes in and, says, okay, I'm ready to invest in your company. And then what is your perspective on if I need funds in the future, let's say 6 months down the line, 8 months down the line, 10 months down the line, that I don't foresee, right? So what is your perspective on these cash injections?
They make and break relationships. When you're an entrepreneur who's on the receiving end and doesn't get it, you really feel terrible about it.
Yes.
Uh, but when you, so I'll give you the example of Bolt, right, which is our runaway success from Fund One.
Yeah.
I till date remember the date very clearly, 4th April 2020. This is 15 or 18 days into the pandemic. Jyoti Ranjan, the founder, calls me, says, Mohit, I've run out of cash. We have no money to pay salaries. What do we do? Can you give us something or anything just to keep the lights on? I said, okay, give me 10 minutes. I don't want to, like, I'll never make a decision with a gun on my head.
Yeah.
So give me 10 minutes. Let me compose my thoughts. Let me talk to my own team and, revisit my thesis, right? Because early days of the pandemic, we had no clue where and how things are going to pan out, right?
Yeah.
Spoke to the team. We did a huddle. And we said, okay, we still continue to believe in what these guys are building, right? Even post-pandemic, EVs will be required. In fact, EVs probably will be mainstream very soon. There's enough positive chatter in that space. And we said, okay, let's do this. So I called up Jyoti and I said, technically, I could have asked for a limb. I could have asked him to, pledge his kidneys, whatever I wanted at that time. That's how brutal I could be.
Yeah.
I told him, here's a line of 75 lakhs. Keep the lights on, control your burn, and try and raise money in the next 6 months. And he said, okay, Mohit, what are the terms? How will you convert this 30%, 40% discount to next round? I said, no, 0% discount to next round. Subject to you raising in 6 months. If you're not able to raise, if you raise between 6 to 12 months, then it'll be a 10% discount. And anything after 12 months will be at a 25% discount. But I knew the lights won't be on for post 12 months, right? Then it didn't matter, whatever number I would put.
Correct.
He took it up as a challenge and he said, fine, I'll do it. Prime Ventures came 4 months later. Union Square Ventures came 8 months later. Horizons came 14 months later. They raised basically close to $44 million in 18 months from that date. Until date, whenever he introduces me to any of his potential investors or even to his existing investors, he says, this is the guy who kept me alive. None of you would have ever been in my life had he not kept me alive. That's relationship, right? That is topping up. The good part is our conviction on to getting into the companies that we like is so high that we will try and stand by you in your tough times. The reason why, when right now everyone's talking about the funding winter, which is basically a structural bear cycle in our industry, we've had the best time of our lives because we were sitting on cash, we've been investing, we've been re-upping in our portfolios, and we're more than happy to sort of swim against the tide. In 2020, 2021, when the valuations were all over the roof, we made one investment in 2 years. We just didn't understand valuations. 2022, when things started to sort of settle down, shit started coming back down from the roof. That's when we started investing. End of 2020, between mid 22 to early 23, we did 7 transactions.
Okay.
So,
Very
that's it.
And how does that make you feel now to know that that one decision could have changed the course of an entire group of people, an entire organization?
I mean, there can be 2 answers to that, right? There can be a philosophical answer, and then there can be a very practical investor answer. The investor answer is very clear, right? ROI is all that matters. That was a conviction call, and I took it, and that's about it. The philosophical answer, of course, is going to be more about the relationship that was there with the founder, the belief in what he was building, the belief in the fact that together as a team they would function, and of course that very small gut feeling inside which said that no, this is going to work out. This will work out. Yes, it was. I actually went against my IC in that one because my IC was like, this is a company which is almost shutting down. They have no money to pay salaries. Why are we putting more money? And I said, take it as a make or break moment from my venture capital career as a fund manager. But I stick my neck out for this one.
Mm.
I know this is going to work. And if it doesn't, then I'm personally liable for this 50 lakhs or whatever, 75 lakhs.
Wow.
But let this go in.
Mm. Okay, that's awesome. That could have gone in a lot of different ways, but I'm glad it went towards your direction. Another thing I want to talk about is I see, especially when I was in Bombay, a lot of accelerators are popping up, right? Small scale, large scale, medium scale, and sometimes founders, especially the guys who are new in the market, they end up exchanging or bartering quite a lot of equity way early to get into an accelerator program, right? So what are your thoughts on accelerators, and how do you think an early entrepreneur should approach this avenue carefully?
You're now opening a can of worms, which is definitely going to put me into trouble. I'm going to, we at the start of this call, before the recording button was hit, right? You said if there are any moments which need to be
Yes.
edited or cut, let me know post the recording. So
Yeah.
I'm trying to see, can I answer this without creating one of those moments where I'm going to be trying to say cut it.
Okay.
But the good part about the industry that I'm in and about just my style is I'm pretty unapologetic about what I say. So
Okay.
if it has to rain, let it rain.
Okay.
I think it's all junk, right? This is just junk, and further more packaged junk.
Yeah.
Are there other accelerators out there who add a lot of value? Absolutely, no denying that.
Mm.
But why should equity get bartered,
Mm.
right? Why should free equity flow, right?
Mm.
If those accelerators think that they're adding value at a very early stage, then they can get in a great entry point, right? So value the company at 2.5, 3 crores, put in 15 lakhs, or 20 lakhs or 25 lakhs, whatever you feel like, and take proportional equity, right? You bought into your equity, you work with those companies, and you will see ROI on that equity. Why should you ask founders to give you free equity for your services? That is my problem, right? Why should anything be free, right? There are no free lunches,
Mm.
and that is my biggest problem, right? I'm not even coming to the other end of the spectrum, which is all the junkyard boys who are essentially glorifying startup investing, and essentially they've gamified it in accelerator programs and say, we run an accelerator and you should come and get accelerated with us, and this is what we'll do. We'll get you AWS credits, which by the way are free for everyone. Literally, you can talk to anybody and they'll be like, 100,000 AWS credits are free.
Yeah.
Or even Microsoft Azure credits, right?
Mm-hmm.
And essentially also look at the people who are running the accelerator, right? What have they achieved in life?
Mm.
What is their pedigree?
Yeah.
Were they relevant enough in the industry that they were part of? If they are age XYZ, and I'm not saying too young or too old, but determine whether does their expertise actually help you in the business that you're in. By virtue of building a business in 2022 or 23, you're going into uncharted territories. It'll take people of exceptional vision to guide you into those territories. If I was an entrepreneur in the 90s, the world was an open little canvas for me to play in, because India had just got liberalized. New businesses were being set up. Everything was great. But that same playbook will not work in 2023. So
Mm.
see who is what accelerator you're getting part of, what is the value addition that you're getting, and then try and identify a model of getting in those accelerators or angel platforms or XYZ at terms which are equitable, right? And most investors are now seeing past that charade. If you've given too much dilution on your cap table to people who are not adding any value, investors don't touch you anymore.
Mm.
At least
Right.
not the institutional ones.
Yeah.
So,
Yeah.
so like I said, I've tried to answer it as honestly as I can.
Yeah, no, because genuinely, like I've sat for a couple of these accelerator calls with a couple of my friends who've had startups, right? And a lot of these discussions, in the first 10 minutes, it's always about we will need this much and then we will give you this. It almost sounds like you're going to a shop and buying like a sari or like an outfit, which should not essentially be the conversation, right? So hence I asked that question, because I had a feeling that I was uncomfortable in a lot of these calls, especially the conversations and the kind of people who were having these conversations. That brings us to then ITI's approach, right? So a lot of funds take different approaches. A lot of them are super involved in the companies that they invest in. A lot of them work on like a reporting equation where, you know, you give me the numbers and you give me the reports. It's pure profit making. And some of them are extremely emotionally attached to the companies that they invest in. So what is the balance for you, and how do you guys do it?
I think at the risk of sounding a little bit of pompous here, right? We're sort of at an intersection circle of all the things that you just mentioned, right? Uh, because we don't want to be running these businesses. I think we pride ourselves in investing in great people who can run these businesses. Our job is just to sort of give them direction when they need it,
Yeah.
help them if they stumble,
Yeah.
but definitely not run those businesses, right? Um, we are also not the people who will just sort of say, okay, now that we're invested, once in 2 months, send me an MIS. My team will look at it, and then we will proportionally speak to you 3 months later. That's also not happening. We speak, all our portfolio companies speak with me and the entire team every month. There are times when there's really nothing to report, right? I mean, the numbers are fine, it's all of that, and then we just do a candid conversation, or what's happening at your house, or you had a child, or you got a new house, XYZ, right? So it can just be a candid conversation, right? You just know it doesn't have to always be professional. Is this too personal as a relationship? Maybe, right? I have, again, like I said, right, we're all learning on the job. Sometimes being too personally connected to your entrepreneurs, it's both good and bad, right? It's good because you really are passionate about them, you really are empathetic towards them and all of that. It turns bad when things don't go the path that you had expected them to go, right? Um, so I'm trying. That's the part which I'm still trying to figure out myself, of what is that relationship boundary, right? Where it becomes too friendly,
Yeah.
non-friendly. What's the middle ground? I haven't figured it yet, so I'm very candid about accepting that.
Yeah.
Because I think, I mean, my team always say that you're too emotional about some of your entrepreneurs. Like, you'll try to ring fence them, and you'll closely guard them.
Yeah.
They're not performing, you have to accept it. Our auditors want to take a write-off on that transaction. I said, okay, there's no reason to take a write-off. He will do better next quarter. Just hold on. But yeah, it's still trying to figure out that interpersonal chemistry for sure.
Yeah. And I mean, I'm of the opinion that I don't think you'll ever find an answer to that. I don't think there is a right answer to that. I think it's just very, very contextual to the situation and the people. So yeah. And so taking this further, right? How do I, if I'm a startup, right, and Mohit is my investor, right? How do I build trust with my investor? What's the best way?
I mean, like I said, right, you will first walk my minefield of questions. I will play devil's advocate, ask you very, very tough questions. And depending on how you start answering them, that circle of trust automatically starting to get built out. If we are on your cap table, it's not just about Mohit, right? It's about ITI now. It's about all of us. If we are on your cap table, you're already in the circle of trust. And when you're in the circle of trust, you're basically accessing our entire network. We're accessing all the cross portfolio. So we have a common WhatsApp group for all our portfolio companies together, right? Where they can talk to each other, they can share ideas, they can ask each other about what an ass Mohit is, or give praises to Mohit, whatever they like.
Yeah.
It's a pretty open culture, right? So that's the circle of trust that you walk into. So it's I mean, I don't think there's like a one size fits all. Everyone has different ways of penetrating that circle of trust. But if 24 people have done it, 24 sets of people have done it, it's a good thing.
Okay. Also, do you need a water break for a quick minute, or are you good with the pace of everything? So jumping into a very interesting question that I've been hearing, or I have heard in pitch calls before, is the dilemma of the right time for an idea, right? So especially now more than ever, a lot of companies are trying to become super technologically edgy, and then Oh, sorry, AI is the buzzword, blockchain is the buzzword, right? So whenever a company comes to you, let's say, right, what do you think about an idea having a right time? Do you think that exists? And then how do you, as an investor, let's say you really like the idea, but you really believe that this is not for the next 5 years, how would you then approach that relationship?
I think trying to time the market, right, is a very tricky thing. Nobody can get it right. I mean, Warren Buffett always, I like to put it the way Warren Buffett says it for listed side, right? That basically buy into the fear when everyone's very fearful, buy into that fear and sell into the greed. Um, I think venture capital also pretty much works in the same lines, right? When something's too hot, when everyone's talking about the buzzword, Gen AI, XYZ, right? Don't go chasing businesses at that time. Don't go chasing deals at that time.
Yeah.
Um, when sort of the dust settles down and when or people are not talking about a sector, then go bottom fishing, right? Like right now, I think we're the only investors who are looking at edtech companies.
Mm.
Um, EdTech's like taboo. Nobody wants to talk about it. Nobody wants to touch it with a barge pole
Yeah.
100 kilometers away. But we're seeing some very interesting transactions in EdTech, right? I mean, and if done well, like with our only thesis on EdTech is simple. It should be a product where people are getting pulled to come and learn versus you pushing it down their throat and saying, if
Mm.
your child doesn't learn coding, he will turn out to be a total loser. I don't want to be invested in that.
Yeah.
But I'm curious. I want to upskill myself. You're a platform which I've heard does really great things on upskilling. Can I partner with you or can I come and learn a course with you? That kind of tech works. So I think timing is always going to be difficult. The Just coming to the latter part of your question, there are some sectors, right? Like let's take the case of climate tech, right? Impact investments or blockchain and carbon credits in blockchain.
Yeah.
It appears that the time will come 5 years down the line, but I'm not too sure, right?
Mm.
Because technically the time should be now. Why even 5 years, right? Are we polluting the climate well enough? Of course we are. I mean, I'm guessing you're not in India today, are you?
No, no.
Right. So I'm sitting in Bombay. It's October 10th, 11th, or something like that.
Yeah.
Right. The temperature outside is 39 degrees. Okay. If this is not climate impact for you, then I don't know what is.
39 degrees.
39. This is like peak summer temperature in October. Right. So if climate tech is so important, why 5 years later? Why not now? Right? Why are we not doing things to curb pollution today?
Yeah.
So maybe that's just a sector which probably has too much froth in it, right? Saying that every plant that I will plant will turn into blockchain credit, which I can trade in the future.
Yeah.
I mean,
Makes sense. Yeah. And so do you also have any preference? Like, for example, right? At the end of the day, every time I have a conversation with a potential investor in personal private capacity or family offices, the idea is always, at the end of the day, it's about the exit, right? We're still donating money unless and until it becomes something, right? For it to become from a donation to an actual funding, there needs to be an exit. So when a founder comes to you, do you expect a certain level of forecasting or knowledge about who potentially might buy them out or the kind of exits they might have in the market? Or is that something that you guys co-create throughout the journey of the founder being with you?
I definitely don't ask for a founder what is his exit strategy because that's a red flag for me. If you're building something with an exit strategy in mind from day one, that's a problem, right? Exits, some of the best transactions or best M&As that happen will happen when the founder just doesn't want to sell, right? And those are the founders we want to be invested in. And I've been lucky enough to be part of a host of exits in my early journey. So Ecom Express we exited when Robert Pincus came in, completely sold Grab to Reliance, Wixo to Shiprocket, 1MG to the Tatas. So I've seen a bunch of exits, right? And I can safely say, just when I didn't feel like selling, those opportunities came to sell, and it made sense at that time, and I sold, right? Um, from the fund also, like right now, we're just starting our 5th year, so we will start having those exit conversations. Uh, but I don't think like I like to say that you kind of co-created with your entrepreneurs. Again, taking a bold example,
Yeah.
the relationship with him is such that if I tell him tomorrow that, hey, these are the reasons I'm compelled to exit, he will create an exit path for me, which will be really monetizable for myself. Because he that's the IOU one that I have on him.
Yeah. Yeah. Okay,
Right.
very Godfather-esque, but yeah. Okay. So let's move a little bit towards people who want to work in this space. And I know it's still a growing space, especially in India. For now, I've predominantly been active in the African VC space, and there's a lot of people who are coming from different backgrounds, marketing, business, accounts, and they really want to get into the VC space because there's this assumptive glamour about the VC space. So what would you advise to them, and what are the skill sets that you look for when you bring somebody into, let's say, an ITI?
Um. Uh. Okay. I'm just trying to arrive at an answer which will make sense to everyone. But I don't think. I wish I could sort of say that, if you acquire XYZ degrees from XYZ colleges, you are an ideal fit for VC.
Yeah.
I think what really matters is, are you a determined dreamer? That's my one word answer. If you have the ability to dream into the future, if you have the ability to look at businesses and see all the potential synergies those businesses can draw up, open up various different segments around them, that makes you a great VC. Right? It's not about just what the founder is building. It's also about what you think can be done alongside with the founder. That makes you a great VC. Sometimes it can be taught at an Ivy school. Sometimes it can be taught at a local college. Sometimes it can be taught in your CFA institutes. Sometimes it can be taught in an ICFAI course. I don't know. Fundamentally, if you're the dreamer, all these degrees will only just sort of aid you in getting that seat at the table. But I think the primary crux, and some of, like, I look at so many of my peers, right, in the industry, incredible vision around what they want to build for businesses, right? And I think that really is the make or break.
Okay. And can you talk to me a little bit about, your perspective of due diligence? Everybody sees it differently, right? Sometimes, there's three steps. Some people have 4 steps. Some people have as long as, like, there's legal, there's demographic, there's probably 2 meetings where it's like you're honeymooning with the founder. So, like, what is the process time, and what are the best ways, or do you guys have any mental models that you guys use for, like, top tier due diligence for a founder in a company?
So, okay, I think due diligence is a very broad question, and it will have to be tackled depending on the space that you're investing in and the sector and the stage at which you're coming in, right? So due diligence at early stage will be very different. Due diligence at Series B, C, D level will be very different, and due diligence at IPO will be very different. So let me talk more about seed, Series A kind of due diligence, right? Where there's not too much past precedent around what you built. There's a little bit of precedent around it. I mean, the LDD side is, I think, the easy part, which is the legal due diligence, because there's just so much information about everyone on the internet today, right? I mean, all of us, like, right from if you have a DUI driving in the US to anything and everything. If you're at a frat party where you sort of lost it, everything's there on the internet. It's just about digging in with your name, right? And if you are amongst the few who have slightly uncommon names, then it becomes very easy for me, right? Because like, I shouldn't be saying this out loud, but we were waiting for our regulatory approval, and I was trying to contact our the officer who's in charge, and his landline was constantly busy. There's no way I could get into him. And they don't give out cell phone numbers, right? Because regulators typically will only do all conversation on a landline phone. And I put up his name on Google. It's a very, very unique name. I found links, and then I go to a Facebook page, wherein he's put a comment with his own cell phone number in it. And I think, okay, this is interesting. I go to Truecaller, I put in that number, it says that same name. I said, okay, let me just try calling on this one. And then I call him, and it's actually him. And he's like, how did you get my cell phone number? I said, "Well, you put it on the internet, my friend. I think, can you send me the link? Maybe I did it in my past life, right? I probably did it 5 years ago. So
Yeah.
whatever it is, it's there on the internet right now. And
Mm.
it's open. Like I haven't sourced it in any other way. This is on the www World Wide Web.
Yeah.
Uh, so that part of due diligence is easy to get to, right?
Mm.
Knowing who you are. I have to sort of candidly admit, I do look at social profiles, your thought process around. One of the key things that I try to look at is, do you suffer from split personality, right? Are you
Mm.
a different human being on Instagram? Are you a different human being on LinkedIn? And are you a different human being on Facebook?
Mm.
Which is 90% of the world, by the way.
Yes.
90% of the world.
Yeah.
But you will still see some level of consistency across the three platforms, right?
Mm.
If you have the right sort of ability to build or whatever I may call it.
Yeah.
So that is something that we definitely look at. That's more of a personal and legal kind of due diligence. On the financial due diligence, of course, we have agencies which work with us, we partner with,
Mm.
get all the hygiene standards in place. But typically, we've not encountered too many financial fraudulent kind of things in due diligence.
Yeah.
One of the key things that we do, and I think that really differentiates us from some of our peer VCs, is we take board seats and we actually sit on that board, right? Versus
Mm.
exercise the right or have the optionality to be on the board.
Yeah.
We are on the board. We
Mm.
stick our neck out,
Yeah.
we put our name there, and we are willing to take the fiduciary responsibility along with you, hand in hand. We know, we understand, we are fully cognizant of the fact, the the negative connotations that a board seat can bring on.
Yeah.
And we are willing to put our neck out there and say, these 24 businesses that we are invested in, from a DD perspective, they will pass your check because we are there on the board, building them hand in hand.
Yeah. Yeah, I think it also shows the investors that you have skin in the game. So I think that also plays out very well. I know we're close to time, but can I just extend 5 more minutes because I've just
No
got
problem. No problem.
Thank you. So I just want to check the social media thing, right? Because like this is honestly it's a personal dilemma, right? Whatever split personality that you just mentioned, right? LinkedIn, Instagram, whatever. So when you come to think of a brand, when these social medias were started, they were started for different purposes. Now it's sort of like merging into one. And let's say you are investing in a founder and the founder happens to be, and I'm pretty sure you might have some as well, like some influencer of a beauty blog, and their business idea might be completely different. Does that kind of bias?
I have one in my team. I
Oh,
have
you
one in
do?
my team. Yeah.
Okay, okay. So does that bias come into play? Does the industry have a lot of bias? Because I'm assuming that, and you can correct me if I'm wrong, is that the Indian VC space, majority of it could be slightly into a more conservative playground in terms of biases and mindsets. And so how does that work?
Uh, okay. If you are doing, say, if you're an influencer in beauty, right, or whatever XYZ segment,
Yeah.
and if you're doing that as a recreational thing on the side,
Yeah.
that's fine.
Yeah.
Right. But if it's hampering your daily life to a point where you're spending an obnoxious amount of time on that platform,
Yeah.
then that definitely is a red flag.
Mm.
Right. So, and I'll tell you, within my own team, I won't name the person, but within my team, there's somebody who runs a beauty blog, and has about 27,000 followers on Instagram. Very, very active. Very, very engaged community.
Yeah.
But when she's in office, she'll never look at Instagram. She'll not even open up her Instagram. But from 5:30 or from 6 in the evening to about 7:30, she does that as a recreation thing, and that's totally fine. That's out of office hours, the recreation thing for her. None of us have a problem with it, right? So so you can sort of live those two lives, um, but in moderation and knowing where to draw the lines. It shouldn't impact your day job. If it's impacting your day job, if your dopamine kick is missing and you keep checking
Yeah.
if you keep checking the gram for how many likes and how many comments and all of that, then there's a problem for sure.
Right. Okay. And then coming to something that you discussed way early in the conversation about ethics, ethics and cleaning up. And I'm doing sort of a teaching stint outside the country right now for a little bit. And so we talk about ethics a lot, and I've only realized how important it is when I'm actually teaching it, because now I feel responsible, right? So can you tell me a little bit more, because this is an uncharted territory, ethics in the VC space. Can you talk a little bit more about it, and what do you see and what do you want to change?
Oh, we need to hit the reset button in its entirety. We spoke about accelerators, incubators, angel platforms. Ethics are definitely lacking there. We spoke about entrepreneurs who are uh, in the false pursuit of fool's gold, quote unquote, running slightly unethical ways and means of revenue booking, of practice around what they're building. Um, VCs who are taking kickbacks on transactions, are creating unethical clauses in SHAs, on liquidation preferences. I mean, it's across the board, right? It's a systemic problem which needs to be addressed from the root cause, and sort of it's like a cleansing act that you have to do through and through. Um, and you know, I'll give you an example which is close to home, and you'll understand it really well, right?
Yeah.
In the early 90s, India's ethics on the stock market were practically negligent, right? There were these so-called star players who came and rigged stock prices, and you can participate in that rigging and make money off it.
Yeah.
None of those people are either alive or even known to humankind today, right? I'm not talking about Ketan Parekh and Harshad Mehta and all those guys, right? They're nowhere there.
Yeah.
Because we went through a cleansing act. We basically weeded out all of this. We brought more information out there. We created checks and balances. SEBI did a phenomenal job in cleaning up and said, okay, let's create checks and balances. People who are fund managers at mutual fund industry should be doing this, cannot do this. Brokers can do this, cannot do this. Companies should do this, cannot do this. There was like a infusion of ethics end to end.
Yeah.
That said, I'm not saying that it's completely clean even today, but we are 99% there. What it has resulted in is that our stock markets are one of the best stock markets in the world today. In the last 20, if you take a 20 to 25 year sort of price chart on Nifty, we practically beat every other benchmark in the world. We practically beat every asset class in the world. That is the power of building right.
Yeah.
And I want the same for the venture capital space, right? If we build right, we will have so many great businesses, so many unicorns, decacorns that will get created in the next 10 years. The world will be amazed, because the largest TAM in the world is us. 143, probably 150 crore human beings in one country, which is democratically run, right? We're not a communist society, we're a democracy. Everyone's has a voice and opinion. We are the largest TAM.
Yeah.
All you have to do is just build right for 150 crore people, and you will have enough and more that you're doing.
Yeah.
That is really the power of getting the cleanup via ethics done.
Well, that's awesome. Yeah, yeah. And you should definitely consider doing sort of like do you do LinkedIn Lives? I don't think you do. I've never seen you go on
I've
LinkedIn.
not done LinkedIn Lives. No.
Yeah, you should consider it definitely, because I feel like a lot of young people, college students would really like to listen to what you have to say. So I think that's just a side. But my last question for today is, Mohit, so far, right? I mean, I've got a small peek into who you are, what you do, and what you're passionate about. But who is Mohit down the line, right? I don't want to give a number, but what does Mohit want to do, and how do we track where Mohit goes, and how do we follow his journey going forward?
So I as much as I'm not a number oriented person, but the one number that has always sort of been in my mind from a very young age was the determination or the grit to manage $1 billion+ in AUM. So that is definitely a success metrics which I will be tracking personally.
Yeah.
But it may take me a while to get there, because it's not just about getting to that number, but it's also about sustainably being at that number and being relevant and being the go-to person even at that number. So that's a matrix which I'll look at, because what I feel is that number empowers me to do to do all of this, right? Today we are doing this at a smaller scale. It empowers me to do this at a much larger scale, right? To give or impart the same knowledge and wisdom at a much larger scale.
Yeah.
200 crore people will actually listen to it and say, okay, yeah, this guy makes sense. And he's also managing money, which is worthy of him saying all these things.
Yeah.
So that is a matrix that is definitely worth getting into. I will definitely not join politics, so maybe not that way.
Yeah.
But yeah, that's the 10-year plan, and I think we're slowly sort of putting the right seeds towards getting there. We'll start seeing some of the trees sort of bloom up, and let's see where it goes.
That's awesome. That's awesome. Yeah. Yeah, hopefully we get some sort of like a frontline seat for a second interview, maybe in the future, now that we've already met.
Absolutely.
But no, really, really appreciate your time. Thank you so much. This was really amazing. I've got a bunch of notes. I think that you've got so much to give to the world in general and the industry, definitely. And you should definitely consider like writing more. I've followed your blogs, talking more. And yeah, I really, really appreciate your time. Thank you so much, Mohit.